Hello everyone, my name is Alisson Nunes and today I'll be presenting my final presentation for business finance. My company is PUMA and the competitor I chose to be comparing and analyzing is going to be Adidas. To begin with, I would like to introduce the company. PUMA was founded in 1948 by both Rudolf and Adolf, that are brothers. They call the company Dassler Brothers Shoe Factory, as it's their last name. However, 1 year later, Rudolf kept on the company, calling it Ruda, and Adolf split up, opening his own company that he called Adidas. However, later, Rudolf changed the name of the company to Puma, as he wanted to associate the brand to the animal Puma and its speed, strength, and agility. The company works with sports footwear, apparel, and accessories. However, its main focus is on footwear. An illustration of that is that the company is the fourth largest footwear company by market cap, and it's even though it's a German company, Puma may make most of its net revenue in America, being 43.5%. The first thing that I wanted to analyze was the current ratio of the companies. As we learned in this class, a current ratio of 1 or higher is good for a company to have, as it shows that they have enough assets to cover its liabilities and debts. So as we can see here, both of the companies are doing a good job keeping their number above 1.25. Even though Adidas is a bigger company, Puma is doing a better job keeping their number higher than its competitor. The second thing that I wanted to analyze was the inventory turnover of the companies, as it's pretty good for us to analyze, as it tells us how good the company is doing in its sales. As we can see here, both companies are pretty similar, having similar numbers, turning over its inventory in similar days. However, as we can note something here, is that from 2021 to 2022, the companies got worse in its sales. So I believe that the company should be focusing more on the marketing and in order to have better sales and results in the future. The third thing that I wanted to analyze was debt and equity ratio. Here is a great number, especially for investors to be analyzing, as it tells us how risky the company is to invest in. So in this graph, a lower number means that the company has lower risks investing, and as we learned in this class, a lower risk investment gets us smaller results in the future. So as we can see here, Puma doesn't have that much risk investing in. However, Adidas, as of last year, 2022, got a little bit more risky, especially because they are trusting more on debt in order to finance its business. Something that I figured out was good to point out in this presentation was the equity and debt growth of the companies, especially because, as we can see here, Puma has been growing in equity and consequently in debt, which tells that the company is growing. It's normal to grow both, and it tells that the company is growing in the market. However, as we can see, Adidas, they are decreasing in equity and growing in debt, which means that the company is trusting much more on debt to finance its business. The share prices, as we can see here, Puma has a stock price of $56.16, which, if we calculate the EPS, that is the earnings per share, times the PE, that is the price earnings, we can have the stock price of the company. However, we can do the average PE, that is the average of the companies in the same sector, in the same industry as Puma. We can have 29.91. If we calculate the EPS times the average PE, we have the expected value of stock. So here, the expected value of stock is 61, and we are paying 56.16 in Puma stock, which means that we are doing a pretty good job investing on this stock. However, Adidas, as you can see there, we have a stock price of $92.39, which is a bit high. As we can analyze the expected value of stock, we can see that their EPS, earnings per share, is negative in $1.03. So we have a negative expected value of stock, which means that the investors are losing their money with the stock as of now. so it's not worth buying it because the expected value of stock is $30.81 negative. However, the stock price, the price that we are paying, is $92.39. Another thing that I found out interesting to analyze is the dividends. PUMA, as you can see here, have a current dividend yield of 1.51 per year and Adidas of 0.41 per year. The payout ratio of net income in PUMA is 34.7 and Adidas is 49.2. As you can see in these graphs, PUMA has been growing and paying more dividends through the years. For example, in 2020 they paid 0.16, 2021 0.72, and in 2022 0.82, which means that they are paying more dividends through these years. However, Adidas has been decreasing these numbers, paying less dividends through the last 3 years. As you can see here, they paid 1.30 euros in 2020. However, this last year, 2022, they are paying only 0.24 euros. In conclusion, we can see that even though Adidas is a bigger company than PUMA, PUMA is growing better lately with better numbers and it's improving more. Adidas is going through a tough moment as of right now, especially because they are trusting more in debts than equity to finance its business. And both are large companies, solid in the market, good to invest. However, now as we could see through the presentation, PUMA is a company that has a more promising future as of now and has more promising results in the future, whether Adidas is going through a tough moment and is not as good to invest as of right now. Thank you so much. My name is Alisson Nunes. Thank you.